Welcome to Business Reporter's Future of Payments campaign, hosted by the Telegraph Online. Today we are going to talk to Anders Cour from Saxo Payments. Morning, Anders.
Good morning.
So our economy is more and more reliant on fast, smooth, cost-effective online payments. What are the major challenges in the industry today?
We're seeing an industry where the consumer is becoming global. And when a consumer is becoming global, he wants or she wants to trade abroad and doesn't really care whether the goods and the product and service will be bought in the Netherlands or in Australia or in Scandinavia if he or she is based in London. And I think that has driven a huge amount of small to medium-sized businesses into a space where they need to be global. And that's traditionally been a very hard thing to be if you are a small to medium-sized business, but because you'll typically lack that bargaining power that will give you the ability to trade globally. And that is a huge challenge for the industry, because today there is a gap between the service provided by the traditional banks and what is actually needed when you're a small to medium-sized business.
And so how do these problems manifest themselves, and who bears the cost?
The fintech industry that has evolved over the last 5-10 years has done quite a good job to provide the ability for SMEs to go global. However, there's still a long way to go in terms of providing true global account infrastructure for that kind of businesses. With the trend that we're seeing right now, where many banks are focusing on their domestic area, which makes sense strategically for them, you actually have a lack of access to financial infrastructure. That again, of course, is hampering or could hamper growth for a lot of the SMEs.
Well, that sounds pretty expensive, is it?
The cost side of it, at least what I'm aware of, is not the most important thing when it comes to providing the growth for this industry. I think it's actually more the access to bank accounts in various regions that again would enable these businesses to trade.
So what's the solution?
I think today you have, as an SME or a consumer, you have various choices that you can use within the fintech industry, and you of course have the traditional banks. That's currently the solutions you have in the market. I think what we'll see over time, 5-10 years from now, is that we'll see the creation of a single global digital market. That single global digital market will have the traditional fintech industry. It will have the banks that will of course make a transition into becoming digital. And you will see the large tech businesses with a massive pool of clients owning the platform that will also come into that space and try to offer financial services to a broader range of people.
And what about this term utility concept? Can you talk about that?
If you are based in the part of the value chain that is servicing consumers or corporates, you will focus on that. And you are typically very, very good at creating a brilliant user experience, while focusing on, let's call it, the pipes and the core banking side behind might not be as attractive. Most likely because it's not as profitable as holding the client relationship, and there's a lot of infrastructure investments to be made. So we think that over time we will see the evolving of different utilities that will literally only have the purpose of providing the pipes to the digital market that will again service the consumers and the corporates.
So what's your solution, and what do you bring to the table?
We have the philosophy that anyone in the digital market or operating at a digital market shall be able to offering financial services through a utility that will not in any way compete with them. I think we've built one of the first global utilities within the financial industry, what you could call a utility on purpose. And our solution is quite simple. We will enable anyone that is operating in the financial space, in the digital world, to offer financial services to their clients in a white label setup.
And how much do we save?
I think, of course, there is some savings, because the way we do it is we tend to do it on a massive scale, which again will lower the cost. But it's difficult to say, because the price will always be set by our client towards the corporates and the consumers. Eventually, we believe it will benefit the corporates and consumers. But what I think it does on a shorter term is it actually provides the access two bank accounts in various regions in a controlled environment and enable our clients, the payment gateways or the banks or the tech businesses that would like to offer financial services, to actually do that on a global scale towards the client base, so they can monetize on the client base they already have.
Now, you're not the only company in this field, and technology is accessible to everyone. What sets you apart from your competitors?
I think, again, we have to distinguish between operating in the digital space and fighting for the client relationship towards the corporates and the consumers, and operating in the utility field. So I think, in our opinion, we actually try to make sure that both the banks that are members with us and the tech businesses and the fintech businesses gain from the partnership. So we see us much more like an enabler than a disruptor. And I think, as far as I know right now, there are no one that is actually doing the same. While in the digital space, of course, there are a lot of businesses with brilliant technology.
Well, you say you're not a disruptor, but are you not disrupting the bank's model?
No, I don't think so, because I think what you'll see over the next year, and we've already seen that trend now, is that many banks, especially the tier 2 banks and the tier 3 banks, will reduce their geographical exposure and focus their resources on the digital space in their domestic market. And that's exactly what we enable them to do, because by plugging into a utility, they'll still have the capabilities of servicing their clients abroad, while they don't have the hassle and the headache of having offices, branches, regulatory environment in, for example, Asia, if it's a UK-based bank.
Now, when it comes to digital payments, security is crucial. How do you ensure your solution is secure now and in the future?
We have a partnership with Oracle. We've outsourced most of the topics related to security to Oracle. We've done that because we are fully aware that in an age of hyper-specialization, you need to do what you are very good at and then have partners that has an expertise within a certain area to take care of these areas. And security is not our core, and that's why we've actually teamed up with someone that are very good in that space.
Technology and regulation are both dynamically evolving. Looking ahead, what do service providers, financial service providers, have to watch for?
I think it will be very interesting to watch over the next 5-10 years to see how this battle to become winner within the global single digital market will be. Because right now we've seen the fintech businesses move into that space and they are quite good at it. We will see the banks push back, and the banks might be slower to get up to speed, but they will come and they will do a good job, I believe. And then in addition to that, you see the tech businesses like Amazon, Alibaba, definitely move into that space as well. Alibaba and Tencent are already big within that space in China. There are a lot of businesses which you could see, airlines that will turn into challenger banks because they have a huge client portfolio through the loyalty networking card, and they'll all be part of that battle to become the winners within the global single digital market. To me, that would be the biggest trend and the most interesting space to watch over the next couple of years.
Well, it's been great talking with you, Anders. Thank you so much for your time.
Thank you.